Hey guys, welcome to a new video. So today I just want to talk to you about what I've made this week from distributions, what's doing well, what's not doing so well, and yeah, we'll just get into that. Of course, we're going to start with YieldMax because we had YieldMax distributions yesterday for Group C, which was for me in my portfolio, CONY, CVNY, LFGY, ULTY. Now this is less than I normally have. I've actually reduced my position in CONY a bit to try and transfer that into COIW from Roundhill. As you know, if you've seen a couple of my previous videos, I have been rotating some of my investments, some of my money from YieldMax into the Roundhill ETFs simply because I really like that uncapped upside that Roundhill offers, and I just think in a bull market it will do better. There is a caveat to it. It is more risky. There is leverage. It's 120% leverage. But for me, I'm just trying to ride those opportunities. Now, of course, the last couple of days have been pretty bumpy, to say the least. It's been red. AI and tech stocks have been tanking a little bit, in particular Palantir. So, of course, for me, I don't know if it's just me, but I actually get quite excited in these times because in my personal opinion, my belief is that this is where the real opportunities lie. This is where real wealth can be made, is when there's these kind of big spikes down so that you can get into some of these ETFs at a good price, at a discounted sale price, if you like, if you want to look at it that way. That's my theory. That's how I kind of play these things. And so what have I been buying this week? I've been buying quite a bit. I had a little bit of cash on the sidelines from the distributions that I made this week, but also had to sell a couple of my growth stocks to be able to fund some of these positions. So I bought ULTY and SMCY. These are pretty much the only YieldMax ETFs that I buy into now because, as I said, I am really liking the Roundhill income ETFs, the weekly ones, the ones that have 120% leverage. They're using more of a swap strategy, not a covered call strategy. And so there is that uncapped upside, which I've spoken about before, which I just really like. For me, I really like that. And then also COIW, which is actually Granite Shares, a yield boost ETF of Coinbase. And that is just doing absolutely killer distributions. It's distributing 180%, I believe. We'll get into that in terms of the weekly. These are all weekly ETFs, so COIY, MSTW, HOW. These four here, these are the Roundhill ones, so anything with a W, basically ending with a W is basically a Roundhill one. So this is Robinhood, this is MicroStrategy, this is Palantir, and this is AMD. Now, we had that tech and AI sell-off. Palantir was down like 10-12% maybe, so I was buying into PLTW the most because I thought that was a good opportunity to buy. There was blood in the water and I was buying it. I'm buying the fear as much as I can. That's just my strategy. This isn't financial advice. This is just what I like to do. I like to keep a cash reserve on the side for moments like this when there's big dips and I can buy into that opportunity. I can buy into some of that fear. And that's just my strategy. It worked when we had the tariff chaos at the beginning of April. The S&P and the NASDAQ were down like 20%, and I was buying a lot of these funds, and they have recovered, and most of these are pretty much in profit, even with these little kits, because this downwards action, or this little dip, if you like, was not as big, not nearly as big as what happened during those tariff times in April when people were calling for a recession. So I bought quite heavily then. And even now in these little dips, I'm still in profit because I bought so heavily back during that time. So that's where the opportunity for me lies. But again, not financial advice, not a crystal ball. You don't know if these are going to keep going down or not. That's why I think it's best to DCA as they go down and as they bounce back up, and then you leave it from there. Let them ride out. Okay, so we had Group C distributions. CONY, disappointing. I mean, 34 cents. It's not. I mean, Coinbase, crypto's not been doing too well. It's been very rocky recently with all this volatility that's been going on. So Coinbase has been tanking a little bit, and so the CONY distribution is down 34 cents. Not great. CVNY, $2.55. That's pretty good. I've only got 65 shares, but I've got such a good average cost price on CVNY, $27, because I bought that in April during that tariff chaos. And that is like, that's still in so much profit, both in terms of share price and in terms of the distributions that I've made since that time. That's why it's so important for me as part of my strategy to buy when there's these big dips and there's a bit of fear in the market. LFGY, always consistent around that 40, 45 cent mark. And then ULTY, bang on the 10 cents, I think it was. There was that crazy dip, wasn't there, with ULTY, was it yesterday, where it went down to like 40, 45 cents and then spiked back up. I think if people had stop losses, and which like not my thing, I would recommend not using stop losses on these type of ETFs, on the income ETFs. So people were getting stopped out at like, I don't know, 45, 50 cents, and then it just booms back up. So you just straight out the fund. So you're going to buy back in. If you're going to buy back in, you're going to buy back in at a much higher price. So stop loss is not for me. That's not, I don't like that strategy, so I avoid them. But yeah, so that's what we got paid for YieldMax, and then of course, or we are getting paid for YieldMax. Those were the announcements yesterday, and then of course we've got all the Roundhill funds, which I've slowly been using my distribution funds to buy into these, to reinvest into these, and I've also been rotating a little bit from Coney into COIW, which is the Coinbase ETF from Roundhill, and from MSTY just a tiny bit into MSTW, which is the MicroStrategy ETF from Roundhill. So these are all Roundhill, these ones in blue. So I bought 132 shares of the Palantir Roundhill ETF yesterday when we had that big sell-off for Palantir. And then COIY is the Granite Shares YieldMax, Granite Shares YIELDBOOST, sorry, ETF. And this one is absolutely smashing it. It does like crazy high distribution rates with like 180%. We'll get into it in a second. MST, that's the Defiance one. So these are all weekly, so I get paid weekly from these, and then obviously it's Group C for YieldMax. Now, what does that look like in terms of what I've made this week, in terms of income for this week? So Roundhill absolutely smashed it this week. Their weekly ETFs, I've really been loving them. They're not only have they uncapped upside, but they also have good distributions, at least this week. We'll see if that continues. They're still quite young. They're fairly new. So we'll see if this is consistent and how this plays out. Because it seems like the battle of the high yield ETFs is really ramping up. There's been some stuff going on Twitter, on X, between YieldMax like having to go at Roundhill shouting back at YieldMax. And then I think Defiance got involved. Like, it's been pretty funny and entertaining to watch that all play out on X. So if you're on Twitter, go have a look at what's been going on, because they're kind of having a go at each other's strategies. But for me personally, as I said, I really like the look of these Roundhill ones. So, and they paid out so well. So I got this week from the Coinbase one, $1,474. From the MicroStrategy one, these are just weekly. So I should be getting this each week, which is just crazy when you compare that to Coney. So like this, the Coinbase Roundhill one as a yield on cost, annualized yield of 120%. If you compare that to Coney, which is only 46%, it's absolutely smashing them out the park. Roundhill is really, I think, winning this battle at the moment. And although YieldMax have been the king, they were the pioneers, if you like. They were the company or the fund managers that really started this. It's Roundhill, which I think with their leverage play, the uncapped upside, the swap strategy, it seems to be doing well. Now, will it be sustainable? We don't know. Again, it's investing. No one has a crystal ball. We'll see how this plays out. Anything can change, but look at these distribution rates from Roundhill, 181% from the Robinhood one, 120% for the Coinbase one, 158%. This is my yield on cost, by the way, so this isn't the one that will be advertised on their website. This is from what I've invested, my yield percentage based on my cost, my investment amount. So this won't be, these numbers will be based on my investment amount, and they could be up or down. Everything's pretty much down at the moment, but yeah. So 158% for the MicroStrategy. So pretty much everything is over 100%, apart from the Amazon one. I bought into this because they had that big dip on earnings, and the Ethereum one, which is 72%, but that's going back up because Ethereum is going to make a real move, I think. And then the other, so these YieldMax ones, they're not doing as well, like CVNY, because I bought it so long ago during that April kind of time when the market was just in all sorts of straits, you know, like everyone was talking about a potential collapse and recession. And so I bought really well, and that's the only reason. If you looked at the CVNY distribution, On the website, it would be probably 70–80%, but that's just my yield on cost. But if you look at these in comparison to the Roundhill ones, they're just not doing as lot. YieldMax is struggling at the moment, and I think the fact that their upside is capped, when everything tanks a lot, and it tanks like 20–30%, and they've got to then try and recover that loss, it's so much harder because they don't have the uncapped upside. Their upside is capped. So if we take Coinbase, for example, say it goes up 10%, then Coney only goes up 5, 6, maximum 7%. So it's got to take Coinbase to do a lot more of an increase in price action to get Coney to recover to where you've invested in at. And that's the thing that I kind of don't love about YieldMax. And I still, like, don't get me wrong, I'm invested heavily in YieldMax. I think they've been great for me since I got into them. But I do find myself just really wanting to reinvest into these Roundhill ones. They just suit my strategy, and I think they're just going to do better, to be honest. Not in a down market, because there is more risk to them. Once again, these are 120% leverage. So if the underlying goes down 10%, so let's say Robinhood goes down 10%, then this is going to go down 12%. There's extra leverage, there's extra risk. So that's why they're able to pay out a bit more, and that's why they're able to go up in a bull market more, but down in a bear market more, or down more in a dip like we've just had. They've gone down more, so I'm buying more of it because I think there's more opportunity for upside from there. Now, like these, so these are great amounts. So from Roundhill, I've made, sorry, to their 3,726 this week, and from YieldMax, I've made 2,510. So I'm already making more from Roundhill just because they paid out so much better from their distributions just for this week. And then you've also got the Defiance, MST. I've got into it as a kind of test. I've not been loving it. But the COIW from Granite Shares, the Yield Boost, these distributions are just crazy. So I'll just touch on that in a second. But yeah, 6,388. This is net Australian dollars. So this is after the 15% withholding tax. My brokerage, Interactive Brokers, withholds tax, which is 15% because there's a partnership, if you like, between Australia and America where it's not a 30%, it's a 15% withholding tax. That gets held by the brokerage, and then my final tax amount at the end of the financial year gets calculated based on my financial situation, and that's personal to me based on, you know, how much I made from this, how much I made from all these other things. So the thing that you need to know if you're in Australia, or I don't know what other countries have an agreement with America in terms of withholding tax, because I think most countries pay 30%, but for Australia it's 15%. So that's just to know this is a net amount after that withholding tax is taken out from the brokerage. Now, COIY, not many people are talking about the Yield Boost stuff, but I watched an interview with the CEO of Granite Shares Yield Boost, and it was pretty impressive. And I just want to touch on it because they have a distribution rate of 180%. 180%. So if you put in 100 grand and it stays the same, and of course it's not, the share price isn't going to stay the same throughout the whole year. There's going to be fluctuations, there might be a bit of NAV decay or NAV erosion. But if you just say it stayed the same, just for sake of this example, if you put in 100 grand, then at the end of the 12 months, you're going to have $180,000 just from distributions alone, plus whatever is left from your shares, from your investment in the market. Which is just nuts money. Like, how are these funds paying this amount? It's crazy. But these guys, so this interview was pretty interesting. You can look it up on YouTube. But they essentially make these high distributions because they use a leveraged long to make income. So they're using option strategies, like they use a put option strategy on a 2 times long. And that's why they're able to get almost double the distributions, because the underlying that they use to make income off is leveraged by 2x amount. But they also, what was interesting in the interview was that they also have a put spread strategy. So they're making income from the 2x leverage, but they also have a put spread so that actually they cap the downside so that you're not getting 100% downside. It's almost capped to, I didn't get how much, but it's really interesting that they're trying to mitigate the loss. So you know when YieldMax ETFs, they go down if the underlying goes down, you know, whatever it goes down, then the YieldMax ETFs go down 100% with it. These don't, or that's at least what I came to believe from when I read or watched the interview. So really interesting. These are all quite new, but to be paying these amounts is just crazy money. And so really interesting to see how these play out. Even if the NAV erodes like quite a bit, if you're making 180% in terms of distributions, you're going to make your investment back pretty quickly, and then it's all just house money. It's free money, baby. Like, how good is it? So I'm keeping my eye on these. I'm testing the COIW one out because that's the one that pays out the highest amount, 180%. They also have a Tesla one which pays out 140%, and I think they have a Bitcoin one which pays out 100%. And they stick to their distribution rate pretty consistently. So we'll see how this plays out. Now, also wanted to talk about this dividendhook.com, which I actually found through Twitter, through X, and they just do really good posts on Twitter. And they actually have this website where they have a leaderboard, and it's all on high income ETFs and distributions and what you can make, and they have a calculator. But this is the leaderboard. I just want to point you to this because, as you can see, this is their high income ETF leaderboard at the moment, and you can see this is Roundhill, Robinhood, this is Roundhill, 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 Roundhill. Anything that ends with a W is basically Roundhill. So Robinhood with 176% yield on cost, and then COIW, which we just talked about, we just mentioned, that's the Granite Shares Yield Boost one. So these ones I've invested, I've got some money in that, and that, and that, and I've just bought the dip on that. So Palantir had that 10% drawdown, so I've got into that because I've been wanting to eye up that as soon as it dipped, and it did. So as I said, I'll get a bit excited on that because I'm then looking to buy in those opportunities. And so I believe that's where the real wealth and the real distributions are made. So just really interesting. So you can check this out at dividendhook.com. It gives you all the ones. Now there's not a lot of YieldMax on here. ULTY is in there. I don't even know what else is in there because it hasn't been so good for YieldMax recently at all. I think that might be, unless I'm missing one. You tell me if I'm missing one in the comments. But ULTY, that's obviously everyone's favorite at the moment, despite the last couple of days drama that's been going on. So that makes the leaderboard. But other than that, you can see that Roundhill and Granite Shares, this is the other Granite Shares, this is the Tesla Granite Shares one. They're doing really well in terms. This is just distribution rates, and of course you have to take NAV erosion, NAV decay into it. What is the share price doing? Is it eroding a lot? Is it on an upwards trend? You've got to take that into consideration. This is just yield on cost, but really interesting to see. And then if you go to the home, you can actually estimate, what you're going to make based on how many. So you put in how many shares, put in 1,000. My next weekly dividend, $1,300 from 1,000 shares. That's an estimate. Average weekly income. So really cool site. You can buy them a coffee. They've got a treasure map. This is all the high income ETFs and how they're performing in terms of distribution. So COIW at the top, HOOW, MSTW, the Coinbase one. Just really cool to be able to see all this. I really like their site. So go check it out, dividendhook.com. And yeah, just wanted to kind of share that with you, share my weekly income, which is obviously I'm very happy with that. Who's not happy with over $6,000 net Australian per week? I can live off that, and then the rest that I don't need, I redistribute, reinvest it into the market of what I think is doing well at the moment, which I believe is Roundhill, and I'm loving this one from Granite Shares YieldMax. So you'll see down here, these are the ones that I'm investing in, mostly Roundhill, a little bit of YieldMax, and the Granite Shares Yield Boost. Now next week we have the second week from Group D within August. So August is actually a 5-week distribution month, and so we'll see what my total monthly income is going to be. Hopefully we'll definitely get over the 30K mark, which is amazing for me. But yeah, it's very exciting times, interesting times between the battle between YieldMax, Roundhill, Granite Shares, REX, Defiance, and of course how we're playing these dips and what we think is to come. I still think there's going to be a big crypto and Bitcoin bull run, so I still believe that Misty, Coney, and of course the MicroStrategy Coinbase crypto funds from these other companies will do well. But who's going to win this high income ETF battle? It's very interesting to watch it play out. Let me know what you're doing. If you still love YieldMax, if you're rotating out of YieldMax, if you're liking the look of Roundhill, if you're liking the look of any of the other ones, REX, Defiance, or Granite Shares. Let me know in the comments, and thanks for watching. See you in the next one. Cheers.